for the focus then on earnings. It was a mixed third quarter coming in for DB Corp. Profits dropped by about 3%, but revenue did see an uptick of about 11%. The recent 25% hike that we saw coming in for print ad rates, however, could improve the outlook for the company going forward. We're joined now by Girish Agarwaal, promoter and director at the company, to help us understand the road ahead for the company. Very good to have you on the show, sir. Just to run through some of the numbers, revenue, of course, saw a growth of about 11.3%, coming in at 660 crores. Your EBITDA was completely flat at 140 crores, and EBITDA margin saw a slight contraction coming in at 21.2% versus a comparable figure of 23.5%. Take us through how the third quarter has panned out for you. Has it met your internal expectations?
So if you see, the overall growth of the advertising in the console is around 13%. And the margins, EBITDA margin is 21%, which is flat because the newsprint prices has increased over last year by almost 20-23%. But going forward, there is going to be a huge relief coming on the newsprint prices, as China has also started reducing their import of newsprint, and the result of it, the $750 has come down to $575 already. The impact of that, which we'll see in the coming quarters.
All right, so that's definitely a positive trigger that we're watching out for as far as prices coming off. But let's break up the segments then in terms of your performance so far. Print, radio, digital, how have the various segments performed, and which will be the growth driver going forward?
So actually, if you look at the size-wise, print is the most important and vital for us. But radio is also doing a fantastic job. This quarter, they have done a 39% growth in the advertising revenue and almost 43% EBITDA margin. So I think they're doing good. And good news about digital is also that after a long time, they have turned positive now. It's a 20% EBITDA margin business of digital now. And we are very confident that this margin will continue or slightly increase also going forward.
All right. Generally, of course, around, election season, we do see some kind of an uptick, especially with regard to ad revenue. What sort of an impact are you looking at in terms of the upcoming general elections? What kind of positive impact should we expect on the ad revenues?
So there are three elements in the government business now. One is the 25% rate increase by the government. That is certainly going to benefit all of us to the extent of around 3-4% overall. Election revenue by the government, that doesn't make much of difference because of the code of conduct. Whatever the growth comes in because of election revenue, the routine advertising business of government goes down. So that gets nullified. Like this quarter, we have a 2% growth because of election. So it's hardly nothing. But because of election, the third basket is that the overall market sees the upside, which means more consumption in the market, more spent by the government in the market, infrastructure projects coming in and all that. That increases the consumption, and the companies like motorcycle companies, television companies, they start advertising more. So that's where we get the benefit.
All right. We've also seen, of course, the rolling out of phase 3 radio licenses, and that definitely seems to be an EBITDA positive. Will it also be positive for the bottom line? If you could give us an idea of what you expect for this segment.
So what happened, we have to amortize the fees and the auction price. So because of that, the PAT number, has to be adjusted for that. But in radio business, it's important to focus on the EBITDA business.
All right, put it together for us then. We now have clarity of 3 quarters. What is the outlook that you have for the remainder of FY19?
I'm very positive. Overall, things are improving. And I'm sure this government is going to do something. We're waiting for the budget to come in on the 1st of February. So I'm positive.
All right, positive. And of course, we're awaiting the budget at the end of this week. What is the outlook that you have if we talk about mature markets versus emerging markets? Which are the markets that you are expecting to outperform, and where really are you investing at this point?
So see, our core areas like Gujarat, Rajasthan, Madhya Pradesh, and the emerging market is Bihar. So in Bihar, we are doing pretty good. Numbers are very encouraging in Bihar. And especially from Rajasthan and Gujarat, we are very, very happy. In fact, we have seen in the last 1 year's time the improvement in the advertising market share in all these markets. So I think that's one very positive thing happening in all these markets. And also one important aspect what is happening, as we've been talking about the tier 2, tier 3. Now I think the tier 4, 5 market has also opened up, because advertiser is also now looking at every possible market wherever he can sell his product. So people are shifting from metros, not only for tier 2 and 3, looking at 4 and 5 level also.
All right, we leave it at that. Thanks so much for joining in. Appreciate you breaking down the numbers for us, and of course expecting some positive triggers going forward from here. That's the view coming in from Girish Agarwaal, promoter and director at DB Corp. If you look at the kind of results that they had posted, we have seen pressure coming in for the bottom line. PAT came in lower by about 3.2% at 76 crores, but advertising revenue, that's really the area of focus as we go forward to general elections as well. It's up 13% in the third quarter, coming in at about 481 crores. Circulation revenue coming in high about 3%, and the radio business has done fairly well as far as ad revenues go. That's an uptick of 39% that we've seen come in for them in the quarter gone by. But with